Welcome back. Today we're going to be doing an update on Alibaba. This was a company I did back in November, but since then there's been a lot of news, a lot of movement as far as other investors go. So I wanted to do an update on it and see if we still agree with our stock price, maybe even take a harsher view on it and see if it's still undervalued even with those harsher assumptions. So real quick, like I said, I did it on November 14th. So that was right about, when was right here. Right before this just huge fall. Great luck, huh? So initially down 33%, but since then it's recovered a little bit and we're down about 20% from that day. I think whenever I did it, the stock was like $170, $167. One thing I touched on in that video is that even though the financials looked great, there was the dark cloud hanging over them as far as the Chinese government goes. And I think for a lot of people, they started seeing that cloud in the shape of a guillotine and said, I got to get out of this, because they were worried about losing their whole investment if something happened between China and the US, you know. But someone who was not deterred by this was Charlie Munger. I want to show you his 13F. So Charlie Munger manages the investment portfolio for the Daily Journal. And if you look here, they have it says they have 5 stocks, but these two down here are 3% and 0.2% of their portfolio. The top 3, Bank of America, Wells Fargo, and Alibaba, make up 97, 96% of their portfolio, with Alibaba being almost 28% of their portfolio. So look at this. In the last quarter, if you remember my video before, he had a position in Alibaba before it crashed the first time and then doubled down. And then this quarter, after it fell even more, he tripled down on Alibaba. Look at this. He increased his position that was already doubled by 99%, which is exactly double. Well, 100% would be exactly double, right? But increased his position by 99%. Very interesting. And I think he's taken advantage of a chance to be greedy whenever others are fearful, right? All right, so let me go into the financials. I'm gonna start with the income statement, but before that, I just want to run through our previous valuations. Our pre-tax basis one, which is usually our harshest one, especially for companies that have high growth numbers, was $166 per share. Our combo between earnings per share and growth formula that comes from the Intelligent Investor, that was $333 a share. Our discounted cash flow model was $226 per share with an average price target of $242. So what I'm going to do here, we're going to run through the financials really quick. We're going to get some updated numbers. It's not going to be as deep a dive like I normally do because we already did that in the other video. But I will take harsher assumptions here because I want to make sure that we didn't miss anything and operate with a large margin of safety. All right, so revenue first up. Look at this. I mean, this is exponential revenue growth. I just want to remind everybody that that's incredible. That's worth something. That's awesome. All right, pre-tax income. Okay, so remember, this is in yuan and this is every quarter going back to June 2013. So at the time of the other video, this data point here was our latest one. Since then, they gave this quarter, which on top of all the other bad news, I could see why there was a big sell-off after this. That kind of sucks. But for the pre-tax income, I use this valuation. Remember, there's not any growth factored in here. So if the company is growing, you want to try to project, or this is how I do it. I try to project what I think the pre-tax income is going to be in the next couple of years. This is all over the place. So I'm going to cheat and put a trend line in here. Let me do that real fast. All right, so here's my linear trend line. I just got it projected out to like 2023, 2024. And you can see on a linear basis, it looks like we're going to be close to about 50 billion yuan per quarter. This is a very crude estimate. I'm sure that there are better ways to go about it, but sometimes you get the best results from just being simple instead of overcomplicating everything. So I'm going to use 50 billion. That's going to be my number, all right? So I got to multiply that by 4 to get a yearly number. So 50 times 4, 200 billion. And remember, that's yuan. Growth rate is next. Let me take away this trend line. All right, so to get growth rate, I'm going to base it on past history. So 5 years ago, they were getting about 20 billion per quarter pre-tax income. It looks like now, let's see what the average is over the last 2 years. The average of the last 2 years, 8 quarters, would be 34. So 20 to 34. So I'm going to do 34 divided by 20. And I raise that to the 1/5 because it was 5 years. And that gets my annualized growth rate. And I get 11%. All right. So 11% growth, 11% in my outline. All right. And finally, for the income statement, I'm going to do earnings per share. All right. And for this one, I'm going to take the average quarterly performance for the last 3 years. So if I do that, that's the last 12 quarters, and I get an average of 13 yuan per quarter per share. So 13 times 4 to get my yearly number, that's 52. All right, let me write that in here. I'm going to show you 2 quick things on the balance sheet. First up, we're going to do assets per share. And the reason is that I want to get a return on assets using the earnings per share. So I had to divide the assets by the number of shares. All right, so they have 633 yuan of assets per share. Okay, so to get my return on assets, I'm going to do 52 divided by 633. All right, and I get 8% return on assets. I would say that's in the okay range. It's solid, but it's not outstanding. All right, and now last thing for the balance sheet real quick. I just want to look at number of shares. So diluted average shares. Okay, and this is not in currency. This is just a number of shares. So this is cool. It looks like they are decreasing shares recently. So they did probably start a buyback during this huge downturn for the market or for its share price. So I like seeing that. That's always a good sign. Remember, look at the quote up top. Somebody else buying stock is always a strong signal. So like seeing that. That's awesome. All right, let's go to the cash flow statement. The only thing from this I'm getting is a new free cash flow number. So this is a little strange too. I remember last time I just took the middle values here and I think I extrapolated out to like 60 billion per quarter. And look at this, the cash definitely dropped. It did not stick on this pattern. One thing I find kind of suspicious is that this pattern looks almost too perfect, right? It's like the same behavior repeating itself every 4 quarters. That doesn't mean the numbers are being doctored, but like I said, I'm just suspicious. Nothing. Anyway, so I was a little wrong last time, extrapolating a little bit too high to 60. So I'm going to say 40 this time. I'm going to cut it way down because that's, I mean, look, they're right under 40 recently. So I'm going to say 40 billion yuan per quarter for free cash flow. So 40 times 4 is 160, right? 40 times 4, 160. And that's going to be my number for free cash flow. Let's get our new and harsher valuation numbers. All right, first up is going to be our pre-tax basis. So 200 billion times 10 divided by the number of shares, 2.7. And then I'm going to have to get that into dollars because this is in yuan, if you remember. So I'm just going to multiply by 0.16. That's the exchange rate per Google. All right, and I get $119 per share. All right, that one's usually lower, like I said, so I kind of expected that. All right, next, the earnings per share base calculation. So I'm going to do 52 times 8.5 plus 2 times our growth rate, which was 11. All right, and then I'm going to multiply by 0.16 again to get to dollars, and I get $254 per share. Nice. All right, and then lastly, our discounted cash flow. I'm going to take our free cash flow number in billion dollars, so let me get to dollars. So 160 times 0.16 is 25.6, so I'm going to say 26 billion. Our perpetual growth rate. I like to do a growth rate that's lower than the one I used in the earnings per share calculation, so I'm going to do 7% here. And then my discount rate is 15%. That's a personal preference. Oh, not 1,500%. 15%. All right. Net present value is going to be $373 billion. Dollars this time. So 373 divided by 2.7. And I get an average target price of $138. 138. All right, average price target dropped from 242 to 170. I think I took much harsher assumptions here, like really harsh assumptions, and I think this can be viewed kind of as like a low-end valuation of the company. Real quick though, what is 170 divided by the current price? That's, what is that, return? That's 30% upside. All right, so even my low end is still 30% upside on the stock. That's pretty strong. But to wrap up, I want to talk about the quote up top. So that is from Monish Pabrai, and it's from an interview he did on Everything Money's channel. That's really, really good interview. I suggest watching all 4 parts if you haven't watched it. I'll link the one that includes the quote up top. But in the video, he talks about why he sold Alibaba. So I mentioned how Charlie Munger increased his position. Well, Monish Pabrai, he owned 2 stocks. He owned Micron and Alibaba, and he sold all of his Alibaba. So that kind of raised a lot of alarms for people. But he was saying, look, there's one reason you buy a stock, right? You buy a stock to make money, but there can be 100 different reasons why you sell a stock. And in his case, it was a tax loss harvest. So he was able to write off that loss, and then he used the money to buy another Chinese company, Tencent, or I think something related to Tencent, that was also beaten down by the same fears that were surrounding Alibaba. He didn't say anything negative about Alibaba, just that he used the opportunity to get a tax write-off and then roll that money into something else that he also thought was discounted. So anyway, I thought that was super interesting. If you liked the video, if you learned something, please like and subscribe. I'll see you next time.